What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Tonight, we're going to go over the index charts from Wednesday. All right. This week was the first week where I took Monday and Tuesday off, right? So I took Monday and Tuesday off. I came to the charts on Wednesday, and guess what I saw? A beautiful, obvious, easy money setup, okay? Just sitting there waiting for me to take advantage of, okay? And that's exactly what I did. Now, I traded the NAS. We had very similar setups on the DJ and the NAS, okay? But I traded the NASDAQ because I thought that it set up a little more clean, and I'll show you why I say that as we go over these slides, all right? But I also want to draw your attention to something. When we have a good setup, all right, one of the criteria that makes it such a good setup, right, is that we have higher time frame traders triggered and trapped on the wrong side of the market. All right. And I'm going to point that out to you here. All right. Traders being trapped on the wrong side of the market. That's what we are looking for when we're looking for our setups. Now, keep this in mind also when we go over these trades. If Stacy were to ask me, what setup are you hunting? I would show him these charts and tell him, this is the setup I'm hunting, okay? I'm hunting this, a pump, coil, and dump, right? I'm short biased. I like to trade reversals, all right? So I'm looking for us to break out, be at the high of the day, coil, and dump for the reversal on the day, okay? A pump, coil, dump. That is the setup, all right? Pump, coil, dump, or else you're looking for a dump, coil, pump. There's only two types of trades, okay? There's only two setups, buy low, sell high. I like to sell high, all right? That's the setup. And this, what I'm going to show you on these charts, this is what you should be looking for constantly, all right? This is the only pattern, you could say, that you need to trade for the rest of your life, for the rest of your career as a day trader. This is the only pattern that you need to become familiar with, all right? So here, let's check out the DJ 30 first, all right? Now you can see I have a lot of lines on this chart, but what I'm pointing out to you is how to use the box, okay? So you can see we have the previous day's extremes, the previous day's high, and the previous day's low marked off. Why? Well, not only is that the high and low of the previous day, but it's also a very clean and clear high and low range, right? We also have a very clear high and low range here between this high and this low, and we can project those levels horizontally on our charts, okay? And we are trying to train our eyes to move horizontally at these levels. At these levels is where you want to take your trades, okay? This is where your most highest probability trades are going to take place from, all right? So that simply is the box. Now think of a box, okay? Usually when you have a box, you have something inside of the box. The box is meant to contain something. So when we have this high, we have this low, you can see price is contained within that box until our 9:30 open when we're breaking levels to the left, okay? When we have hit one of our horizontal levels, okay? So that's how you're using your box. That's why you're using the levels you're using. However, we could also do something like this. We can use the current day's high and the current day's low as our box, right? And once we put in this low, you can see price stays inside of this box until just before the session opens, okay? We break out of the high of this box, okay? Once we do that, we coil sideways and dump. We have an hour up, an hour sideways, and an hour down. That's what you're looking for, whether it's an hour up, hour sideways, hour down, or it's a day up, a day sideways, and then a day down, okay? Either way, you're still looking for a pump, coil, dump, right? Now, if we zoomed in on a 1 minute chart and actually inspected the price action at the levels, right? This is where we break out of the current day's high, right? You can see that we come up, then we pull back. Once we pull back, that sort of puts this high in place. So we have a high, we put this low in place as we go higher. Okay, so now we have a low, and then we get another high when this market starts to pull back, right? So we have this low and this high, and this is sort of our micro box at the levels going into our session, okay? And we stay inside of that box until 9:30 when we spike to the upside. We have our false break of this consolidation, all right? The market closes immediately, closes back inside of the range, coils sideways around that EMA, and then dumps down, okay? This line right here, this is sort of like your death line, all right? As soon as we get these big candle closures below the EMA, below that death line, there's your entry, right? You're getting in right here. Your stop loss is up here near the high of the day, and you are targeting either this low, okay, this low, or this low, or this low, okay? Now you can see, along with these big 5 minute or these big candles closing below that level, all right? This is where the trap is, okay? As we're pumping up in here, breakout traders have been triggered. People are buying unknowingly into the high of the day level, right? As soon as, because this is really like a 5 or 15-minute engulfment right here. As soon as this engulfment occurs, boom, all these people are trapped, okay? All these people are trapped, which is why this market does not come back up there to let these traders out, all right? It's also why this market explodes from high of day to low of day, right? From the previous day's high level to the previous day's low of day level. We come up here, we trigger orders. This market explodes, goes parabolic to the downside to come and trigger orders on the opposite side of the market. This is just how the market moves, all right? Now, here we're looking at the NASDAQ chart. And like I said, I felt like NAS set up a little bit more clear on the day, more clean. And the reason why I say that is because we actually broke the previous day's high, which also was the high of the week level, right? So you can see, again, if we're thinking about the box, right, we have this high, okay, and we have this low, okay? But if you were to project this low across, we break that low here before 6 o'clock, right? And when that happens, we're gonna just redraw our low, all right? So we have this high, this low, price stays within that box until our 9:30 open, all right? Or we could be using the high of the current day, the low of the current day, and again, price stays inside of that box until just before 9:30 when we break out, okay? And you can see, as soon as we break that level, other time frame traders are triggered into this market, right? Smart money sells aggressively into these orders, these breakout orders that are stacked up here, right? Causing this dramatic price drop in the market from one side of the range to the other, okay? So remember, of an A plus setup, a prerequisite of an A plus setup is you need to see these traders trapped on the wrong side of the market, which is evidenced by candlestick patterns, all right? So if we look here, we can see we break out of the high of the current day. We break out of the high of the previous day, the high of the week. We have our 3 pushes into that level. We're throwing big wicks back into that high, all right? Now, if you look close, we do have a 5-minute closure below that EMA, all right? But it's not very strong. And you can see the very next candle, boom, it closes above the EMA, right? But then eventually we do break down, and this 5-minute candle right here, this large 5-minute candle that closes with momentum, with force below that EMA, bam, that's your entry, all right? Now here, you can see how I posted the entry with the stop loss right above this next bar, right? But in reality, my stop loss was started off like up here. But as soon as we keep breaking down, I'm choking that stop loss up, making a 1-bar stop right here, right? Now, when we have this big engulfment, boom, all right? All of these traders, anyone who is buying right here is now trapped on the wrong side of this market, okay? Immediately thrown into drawdown. They are feeling maximum pain, okay? That tells me when I see these traders are effectively trapped at the high of the day, that tells me I can size into this trade, okay? Again, I'm trying to take the least amount of trades as possible. I haven't taken a single trade this week besides this one. So, boom, I drop with size. I lock in a very healthy profit quickly in this market with no stress, no thought. Okay. By the time we get down here, I'm ready to close this thing. Okay. As soon as we go back into Monday's lows, I'm ready to close this thing, even before then. All right. These are big candles on the NASDAQ, right? You could be aiming for this low, right? We pump, coil, and dump. All right. Either way, you're going to be making money. All right. This is the setup. Okay. I'm either looking for this pump, coil, dump, or I'm looking for this, but flipped upside down for a dump, coil, pump. All right. This is the setup. Don't get anything else confused. This is the setup. Okay. This is the setup. Look at this. Pump, coil, dump. That's the setup. Don't make it any more hard or any more difficult than it needs to be. All right. Anyway, man, until next time, I hope you continue to free your mind.